I want to welcome you to the NCOIL-NAIC Dialogue for the spring meeting, Friday, March 4th. My name is Kevin Cahill. I am the Vice President of NCOIL and the Chair of this committee. My Vice Chair is Tom Oliverson, who many of you talked to earlier today about golfing. We have with us many esteemed guests. We're very honored to have the Idaho Director and NAIC President Dean Cameron with us. I know Rod Furness is here. It's the first time NCOIL attendee from your state. Connecticut Commissioner and NAIC Vice President Andrew Mays is here. Andrew, good to see you. We have with us Kerry Wood. I think we shared a little lunch together today from Connecticut. The Alaska Director did not make it, correct? Right. So we were expecting Lori Wing Hire from Alaska, but she didn't make it because her flight was canceled. Arkansas Commissioner Alan McLean is here. Alan, good to see you, Commissioner. Representative Ferguson, of course, our Secretary, and two other members of the Arkansas delegation are here. Montana Commissioner Troy Downing is with us. Thank you, Commissioner. A stranger to NCOIL, somebody we've never seen here before. We welcome you for the very first time, Glenn Mulready. No, actually, Glenn, I think you were here before I was. We have Representative Bennett is also here present today, and Utah Commissioner John Pike, and we have Representative Jim Dunnigan is with us today too. I'm going to just do some official business, but then I'd like to give Dean a chance to kick things off. So first we're going to do the call to order, bang, call to order. Will, the roll call. This will be quick. Here.
We see
a motion to waive. Yeah. We have some legislators sitting among you. They're spying, trying to see what you really think about us. But I'm going to accept a motion to waive the quorum. Matt?
So moved.
Second.
Second.
Wendy seconds. All those in favor, opposed? It is carried. Goodness sakes, I was worried about that. We will also take a motion to approve the minutes of the November 19th, 2021 committee meeting. Is there a motion, Matt? Is there a second, Wendy? Thank you very much. Motion and second, all those in favor, and see the members are trickling in. Hearing no opposition, that is carried as well. And with that, I would like to turn it over to Director Dean Cameron to kick us off here today. Welcome, Director.
Thank you, Senator Cahill, and we appreciate the opportunity we have to be in front of you, and appreciate the dialogue. We thank you for the dialogue that we've been able to have and look forward to today's dialogue. And we thank NCOIL for the collaboration and congratulations to you on a successful meeting, and thank you for your leadership. The National Association of Insurance Commissioners exists to support state-based regulation and exists to support each other. We exist as regulators to protect consumers, first and foremost, by guarding and ensuring company solvency. We look at everything that we do through that lens, and wanted you to know that. We take our responsibility seriously. We enjoy and appreciate working with our state legislators, and particularly with the NCOIL. You are the experts in the leadership field, in the legislative field. You are the body that gets to set that public policy, and we certainly understand that. And we pledge and want to be a support to you, and to be helpful to you as you deliberate on public policy that's important to consumers in your state. We are ready to answer questions that you have for us, but we thank you for the opportunity to be here with you. And just by way, I guess I probably should mention, I think most that are here know that you mentioned Commissioner Mulready. He certainly has been around for a long time. I served as a legislator, was an agent, now serving as commissioner. I also had that privilege of serving as an agent, third-generation agent, and had the privilege of serving in my state senate for 25 years, and used to come and attend the NCOIL meetings as often as I could. And so it's been fun to be able to come back in this role. So with that, Senator, I'll turn it back over to you and let you lead us through the questions. We have divided up, at least of the questions we know about, we have divided up who's going to respond to those.
Well, the ones we don't know, we make Tom answer. So,
Okay.
Just to also for the purposes of just being completely candid with the audience, Director Cameron and I also met last week on a Zoom call or a telephone call. I don't remember which it was. I do so many of those things. And we kind of went over these topics generally to make sure we were on the same page. And we hope to do more of those in between meetings. We think that kind of collaboration can really be helpful and give us an opportunity to put a finer point on things when we get here. So we have a lot.
Could I just jump in with a quick exclamation point? Can you hear me?
Yeah.
Yeah, just on the collaborative relationship with NAIC and NCOIL, I just think we have seen a great improvement in that relationship. And I guess as I just looked down here, I realized, not only do we have a good representation of NAIC, but as you look down, and I think the president of our organization just called me old earlier in that, but I'm not sure. But
he did. I heard him.
We don't just have 6 commissioners here. We've got the president of the NAIC, we have the vice president of the NAIC, we have the B, the Health Insurance Committee chair, the vice chair of the Health Insurance Committee, the C, vice chair, and John is the D, chairman of the committee. So we've got leadership with NAIC, and actually Lori, if her flight hadn't been canceled, is also a chair in that leadership. So I just thought it was significant as I looked down, actually, who was here working collaboratively with you guys. So I thought I'd just acknowledge that. Thank you.
As different as this would sound, any other time, I've spoken to the superintendent of the Department of Financial Services in New York, and if she did not have a scheduling conflict, it was her hope to be here today too. So she's very much interested in getting very involved with NAIC, as is the tradition among, well, no, it isn't actually the tradition amongst New York superintendents. So the first item on our agenda is an update on the state adoption of credit for reinsurance models. Who's your DH on this one? Sir.
Thank you, sir. Alan McLean from Arkansas, and it's a pleasure to visit with you, and I'm going to give you a little bit of the update on the credit for reinsurance model. It's always, I always have to remind myself you all aren't voting on my budget. I'm always kind of weary when I'm presenting to legislators, but you don't get to vote on anything for me, so I appreciate that. But even though Representative Ferguson and Senator Ingram are here someplace, so that's it's comfort. But my background is workers' comp, and so as I've been a commissioner for 2 years now, I've had fun learning some of the other lines of insurance. So and I appreciate y'all's attention to workers' comp. I chair the workers' comp task force for the NAIC, and looking forward to some dialogue this year. But the credit for reinsurance, it's the I just want to give you an update on the state adoption of the NAIC credit for reinsurance models. A number of you may have seen this come through your legislatures, and whether it's the model law or the model regulation, and it's steadily making some progress, and we appreciate your help in your states in getting those passed. To date, the 2019 revisions to the NAIC credit for reinsurance model law have been adopted in 48 states. So it's where it's pending is in Hawaii, Wisconsin, District of Columbia, Puerto Rico, and the U.S. Virgin Islands. So, but we have good reason to expect adoption in these jurisdictions during this legislative year. In most jurisdictions, the passage of the law requires passage of a regulation or a rule, and that is working. They're working, so it's a little bit of a tail there. Then they're slowly getting passed as well. We got ours passed in the last few months in Arkansas. So the 2019 revisions of the credit for reinsurance model, they implement the reinsurance collateral provisions of the EU-US and UK-US covered agreements, which require states to eliminate collateral requirements entirely within 5 years, which is by September 1 of 2022, or be subject to federal preemption. So that's why it was important to get these things passed and moved along, as you can appreciate, and as we all appreciate the state-based system of insurance regulation. We don't need federal preemption. So that's why the deadline's there and why we've been pushing the states. And you should have a map in your material that shows the states. So, we think that continued state action on the NAIC model is our best defense against federal action. And we do appreciate NCOIL's support of the models. So.
Commissioner, the federal government has a process to deal with non-compliant states. When does that kick in, and what exactly is that process, the assessment function?
I don't know the answer to that. Some other colleagues might actually know.
Yeah, so effective September 1st of 2022, they can begin, for implementation. We are hopeful that they will see the efforts that the NAIC has made and the states has made and are willing to let us continue to move forward and continue to work with those states that are outstanding. The enforcement, however, for accreditation, so there's sort of two thresholds. We also have as accreditation standard. So for those other states, that will be an issue for them. The accreditation standard begins January 1st of 2023.
Anything else on this issue?
I think that's all we got on it.
Pardon me?
I think that's all we have.
Thank you so much. Let's move on to an update on race and insurance. We had a special committee. That special committee met a couple of different times, arrived at certain determinations that resulted in some of the responsibility being sent over to other of our standing committees, and they're now taking them up. But we know that NAIC has also been heavily involved in this issue. Somebody want to give us an update on that?
Yeah, so I'll start with that. Commissioner Mays will fill in the middle, and then I may have some concluding remarks. Obviously, in the year 2020, in the wake of the national events on race and inequity, the NAIC took the unprecedented move of creating a special committee on race and insurance, the first of its kind in our history. Of interest after the officers decided to make this effort, of which Commissioner Mays and I were a part of that discussion, the first call that I made was to Matt Lehman, because we felt like we needed to have collaboration and at least understanding of the direction that we're headed when it comes to this issue. The special committee now is chaired by myself as the president and director of the Idaho Department of Insurance, and co-chaired by Clora Lindley Myers, who is our NAIC president-elect and the director of the Missouri Department of Commerce. Commissioner Mays, Andy Mays, is the NAIC vice president and commissioner of Connecticut. He and Commissioner John Godfrey, who is our NAIC secretary-treasurer from North Dakota, will serve as vice chairs. We have 5 critical work streams, and I'm going to let Andy go into the efforts of those work streams and then come back.
Thank you, Director. Appreciate my time. Appreciate being here, Assemblyman. Members of NCOIL, as Tom can tell you, back in my days at Deloitte, I used to be a regular visitor to NCOIL, and it really is good to be here and to see everyone here again. And I do have to, I know my old friend, Commissioner Mulready, as well as Director Cameron and others have mentioned that spirit of openness and cooperation. I think we all know that has not always been there. And we do appreciate all the efforts you've made, and I hope that you found that similar sense, because we want to work together with you as much as we can. And we really do appreciate the opportunity to come here to talk to you, as well as to have the informal discussions we've had. Now, as Director Cameron has mentioned, we have 5 work streams. And we separate this, or at least I separate it in my mind. The first 2 work streams focus more on what we call, I guess I'd just call them the people side, the regulator side. We're looking at what's going on with the NAIC. We're looking at what's going on with the state and with regulators, because we do not feel that the focus is entirely on industry. We are a part of this larger industry, and we think it's only fair that we look at ourselves as well. The third, the fourth, and the fifth work streams are what I call the functional work streams, and they look at the barriers that exist to whether it is to inclusion, to employment, to participation in any way, to products in the various functional areas of the industry. So that's the property casualty work stream 3, life insurance and annuities, which is work stream 4, and the health insurance. And we're looking at any barriers that exist that would present disadvantaged people, people of color, other underrepresented minorities from being a part of this industry. Last year in July, we adopted the charges which reflect the work stream's initial recommendation, and we last met in the fall national meeting of the NAIC to hear what we've done so far, the way we're moving forward. And I will tell you, this is not going to be a quick process. This didn't happen overnight, and we want to make sure that we get things right, that we make decisions based on data. So those efforts, the efforts that we're making to move forward, continue. And as Director Cameron will tell you, one of his emphases is that we have to have deliverables, concrete deliverables this year. So there is a consensus among us that we need to focus on equal access to insurance markets and products, to education, to make sure that insurance companies are not unfairly discriminating. And as I mentioned, we plan to focus on financial literacy, on identifying and removing the barriers that we're aware now exist. We also want to continue to encourage industry practices around diversifying. And I will tell you, based on my previous occupation, one of the things that we used to do, I used to work with the industry, and every year we do a survey. And it was amazing. This is not a survey that was done publicly, but it was amazing how important diversity was to the people in this industry. And we hope to continue to work on that. We have to evaluate how the work of this work stream is related to our core insurance regulatory functions. We're also going to consider the principles for data collection that were developed last year by the health work stream. And as I mentioned, we're looking at data. We're going to look at what data we need and how to get that data. I will tell you, we are committed to a thoughtful, deliberative process. Issues like unfair discrimination, unfair bias, proxy discrimination, disparate impact, they're complex issues. And easy answers are not going to solve this. We're not looking for easy answers. We have had discussions that I would consider unprecedented, both among us as regulators and with industry. And we will continue those discussions. I think the efforts, in speaking personally, they're clearly overdue, but I'm proud to be a part of this, proud to work with the director, and proud to work with NCOIL on this.
Thank you very much, Commissioner Mays. It sounds like, based upon the various specific issues that you're talking about, that there is a sense that there's a finiteness to the process. Is there a sense of when you think you're going to have your deliverables?
I'm going to turn that one. Let me punt here to Director Cameron, who would be in charge of this year. There's clearly an intention to move along step by step. We're not going to solve the problem completely, but there are things that we hope to be able to do as soon as possible, Director.
Yeah, I think, and I appreciate the comments of Commissioner Mays. I think, first of all, we recognize we didn't get here overnight, and we're not going to fix it overnight. Right. And so our first effort for this year was to focus. We've spent a lot of time discussing, looking at, arguing about how to collect data and all of the issues surrounding that arena. And I think there is consensus on the importance of data, but there is not consensus on how to do it, who collects it, how is it stored, et cetera. Those things are still being discussed. Workstream 5 did a tremendous effort in trying to put forth sort of a principles of what data collection would look like. We decided this year, and I'm sorry I'm being long-winded, I'll get around to answering your question. We decided this year that we really wanted to focus on things that we thought we could deliver this year, which was identifying barriers where individuals of different races, ethnicities, genders were not having access to A, the products that are offered, B, the industry, and C, the regulatory community. And so we wanted to focus on what are those barriers, trying to identify them, and try and figure out how to mitigate those barriers so that we can allow others of different races and ethnicities to have access. And so that's our focus for this year. We hope we can deliver some progress on that at the end of this year. I'm happy to come back and report the progress we made at your final meeting of the year, or at the early next year, whatever suits you. And then it'll be Director Lindley Myers who will be president, and in my mind, she will have the opportunity to steer it as to what deliverables she thinks she can obtain in that year.
If you will indulge me, I'd like to invite former President of NCOIL, Matt Lehman, into the discussion to discuss a little bit about AI and scoring transparency. Matt?
Sure. Thank you, Mr. Chairman. And thank you, commissioners, for being here today. I think this is an issue as it came up out of our committee that I want to focus on the data portion. I know you have multiple lanes that you're going down, employment and others that we're in the insurance world. We're going to stay in the insurance world. And so I think it comes down to this data collection. And I guess my concern is in finding the balance between regulatory and prohibition. Because I think, and you're going to hear this tomorrow when we talk about the model that we're going to start working on, is I think there's a path. We're going down. I mean, we're in a world of technology now that we knew would come someday, and I think it's upon us. But I want to make sure that we're working together in that finding that place of regulatory, because I do have a concern on the prohibitions, and so I think sometimes we prohibit if we can't get our hands around it. I think we just have to make sure we get our hands around it. So I know it's a challenge, but I look forward to working with you guys and the industry and all interested parties in trying to find a way to make sure we're protecting. We both have the same goal. You as regulators and us as legislators is to protect the consumer, have competitive marketplaces, et cetera. And so I look forward to at least that piece being something that we can collaboratively work on together.
Absolutely. We look forward to working with you on it.
Anything else to put a lid on this topic for this meeting? Not forever, of course. I think one of the things that Matt's point brings out is that when we start to really delve into this issue, we find that it has a lot more ramifications and a lot more avenues than maybe our instincts told us that it did. And now it's time to really, review it with the concept of getting any vestiges of racism or racial bias out of our insurance laws altogether. So the next topic that we have on our agenda is where people like me fall asleep. Cash surrender value endorsements and the interaction of standard non-forfeiture laws. Wake me up when you're done. Go ahead.
Can I wake you up?
Thank you for that resounding endorsement, Mr. Chairman. Let me quickly touch on the subject. So this came up at the last NCOIL meeting, and Senator Holdman had sent a letter to his commissioner, Amy Beard, and asking about the issue. We had just learned of it at the last meeting, so didn't have a chance to dig into it at all. Since then, NEIC has, as well as I've dug into it quite deeply as well. For those of you that aren't asleep yet, the issue, what it is basically we're talking about a universal life insurance policy where there's a spike in the cash surrender value, and there's a limited time offer to policyholders to surrender their policy for a substantially higher cash value than it normally would have. So that's the issue. There are concerns about, are we actually doing life settlement and calling it something else? And within life settlement, there are certain requirements and consumer protections in place, and so that's just trying to give you a quick overview of what we're talking about. I'll tell you on a personal level, we've dug into it in our state. I think that what I found was our rate and form area approved there's 3 companies that are doing it, and they were approved by our rate and form from the very innocent basis of this is a great opportunity for the consumer. They get to choose. They're not being forced to surrender this. If they choose to, they can. And so I think across the board, last I checked, I think 49 states had approved most of these. But I think that's the basis of it, was just it's in the consumer's favor, and they get to choose whether they exercise that or not. There are concerns, though, again, about consumer protections that are in place with life settlement that aren't under this scenario. And what I found in our state was that with 3 states had those approved, 2 states had done nothing. One of the carriers had done 5 transactions. So that's the extent of it in the state of Oklahoma. I was on a conference call just earlier this week with that company and was able to ask some pretty straightforward and questions with them. It really comes down to the standard non-forfeiture law model with the NEIC, number 808, and that also addresses a minimum cash surrender value with universal life policies, because as you can imagine, with a flexible premium universal life policy, you want to have flexibility to have large spikes in cash value when a consumer puts substantially more premium or dollars into there. What's happening in this situation is those aren't coming from premiums. Those are coming from sort of a random increase from a life insurance company to try to incentivize the surrender of that policy. So all that to say, and you're still awake, so...
I'm sleeping with my eyes open. Go ahead.
There is a smoothness test that's required, and so that cash value there's a smoothness, and there are model acts in that. Historically, within the NAIC, the Society of Actuaries in 1989, that's how far back that goes, recommended that the NAIC Life Actuarial Task Force consider including non-forfeiture requirements for universal life policies. Ultimately, they took no action on that, and so this issue really at this moment is on an individual state-by-state basis from a market conduct standpoint. I will tell you that I have reached out to our new A committee chair, Judy French, who's the commissioner from Ohio, and so she's leading that committee, the A committee, and I've suggested that we kick that back to the Life Actuarial Task Force group. That's where that belongs, for them to revisit this issue and see if they need to clarify that further. So there's a quick summary.
There you go. And for those of you who want to follow along in your prayer hymnal, it's on page 72. That's where Travis Holman's letter is. You can find it there. So thank you very much, Glenn. That was actually succinct and so exciting. Did you see that lack of sincerity in my face? So the next issue it does the opposite. This keeps me up at night. NAIC Climate Risk Disclosure Survey and a preview. We're going to have a discussion about our own climate change presentations that are going to take place tomorrow. So, Director, you want to kick it off?
Thank you,
Commissioner.
And, I'm kind of leaning forward here, which is related to climate change. This really hot machine is blowing on me. But I think, the NAIC has also been leaning into the issue to torture the metaphor there. The Climate and Resiliency Task Force has held discussions on climate risk disclosure since 2009. That was when the survey was first adopted. It was first developed, and then it was adopted a year later in 2010. In early 2021, the Climate Risk Disclosure Workstream heard from other groups collecting climate-related information. We've heard from a whole bunch of them: insurers, investors, the Principles for Responsible Investing, Moody's, rating agencies like that, and CDP. And the workstream exposed a redesigned climate risk disclosure survey last year on November 15th. They collected comments through January 10th, I'm sure you want to know the dates, and they held an open meeting on January 25th to hear comments on the draft. Now, the work stream has since modified that draft survey, responding to the comments received, And following a meeting on February 28th, we'll take a third round of comments. See, we're nothing if not thorough. And then we're going to meet again on March 11th. By the way, Oregon Insurance Commissioner Andrew Stolfi is the one who's leading the survey revision work. You know, the work stream the intention right now is to consider the survey for adoption and to send it to the task force for consideration. NAIC plenary may consider the survey for adoption during the spring national meeting. The revised disclosure is based on the Financial Stability Board's task force on climate-related financial disclosures, and it includes insurance-specific questions to identify how insurers are assessing and managing their climate-related risks. And as you know, Assemblyman New York has been a leader on this as well. And the TCFD disclosure statements have pretty much become the template that everybody's using, so there's comparability. And we wanted to make sure there was also specific, insurance-specific questions that would provide us with the information that we need. The goal of the revised disclosure is to create a tool for regulators to have more transparency. And that's important. It's not direction, we're not being directive, but we have to understand how insurers are managing their climate-related risks and opportunities. If you're going to be paying out claims 50 years from now, we need to make sure that both, the way you're investing and what you're covering is reflective of that. It is not one of the things that I always say when I speak to insurers. I'm not your CFO. Not your chief investment officer. I'm not going to tell you what to do, but I do need to understand what you're doing, and that's where we are. The survey is voluntary. The NAIC administers the survey on behalf of the participating states. Now, just this past year, I can tell you in Connecticut, one of the things we did was reach out to a bunch of the other states in the Northeast, and we brought the total number of states participating to 15. That may not seem like a majority of the states, but it does represent a majority of the companies doing business. Actually, that represents about, I think, 80% of the market or so, 1,400 companies. So it gives us a good idea of how companies are addressing the issue. We have the various climate-related risks. We have physical risks. We have transition risk, and of course, the liability risk. And these are risks that insurance as an industry is on the leading edge of. We are particularly well situated to address this. We are the ones that are providing the coverage, long-term and short-term. We are the ones that are doing the infrastructure investments. And as regulators, we are the ones who need to understand where this is all going in order to protect consumers. That's what we're doing. We're doing this, as you can tell from all the dates, with all deliberate speed. We want to make sure that we do it right, and we have the information that both the regulators, industry, and legislators will find useful as we move forward.
Thank you very much, Commissioner. I guess the first question that I have is, in insurance terms, 2009 is still a relatively recent date. But in real life, that was 13 years ago. What kind of changes are being considered or have been made to the survey more generally and more specifically?
Well, I can't go into specific detail on that. If you remember Mayor Mike Bloomberg, TCFD, as they came up with the questions, that was where we made the most significant changes over the past couple of years. And now using that TCFD template, we are moving to add, because the template covers everybody, every firm reports. But we thought we also needed to have insurance-specific questions on there. And 2009 was a long time ago in many ways, but this is also an area of the industry that's fast developing. Right. The data that we're getting is moving quickly. So we're making sure that what we're capturing as the data that we need, the forward-looking data that will be helpful.
And you indicated that it's voluntary. That's voluntary compliance with the survey on the part of the participants, or voluntary, well, obviously voluntary from state to state. What is the compliance rate?
As I mentioned, it's about, we've got 15 states participating, approximately 1,400 companies, representing approximately 80% of the premium volume.
yeah.
So a significant majority of the premium volume in the U.S.
So in those states that are participating, compliance is pretty high, 100%?
Yes.
Oh, okay.
Yes, we require, certainly in Connecticut, we require our industry to fill it out. And many of them, I will tell you, much of industry has already been doing this because ESG has become ever more important, and industry itself is forward-looking on this.
Mm-hmm. And when you get to the point of picking out specifics that get into focus because of the information you've gleaned from the survey, is there a plan to send that over to the policymakers in the legislature to come up with the rules and regulations that are necessary to do it?
We always love working with the policymakers in the legislature.
We
will be happy to share all the information we have with you. I don't know if Senator Lesser is here, for instance. He's, and we'll mention this tomorrow, one of the things he did last year in Connecticut is direct us to do an analysis of where we are in Connecticut and what we've done. But this is, this is a field that's clearly exploding, and we will share as much information as we have as soon as we have it.
Well, thank you, and I appreciate that, and I'm looking forward to seeing what happens tomorrow in our meeting and watching this very, very important existential issue evolve in the consciousness of those of us who are in the business of making sure that we think in the long term. So thank you so very much. By the way, I got paid to ask that question about legislators by several of my colleagues who are concerned that you like to eat their lunch sometimes when it comes to legislation. So. The next issue, before we get to that, Tom, you have a question?
Yeah, thank you, Mr. Chair. Commissioner, I appreciate your presentation. I was just curious. So I'm looking through the tool here and the questions that are being asked. So this data, when it gets reported, is it de-identified as far as companies, and who is that data made available to? I mean, I guess I'm asking because I'm wondering if this data could be weaponized against companies depending on how they answer the questions.
Well, it is de-identified, and we're not in the name and shame business, frankly. That's not where we want to go with this. We'd like to, the best possible outcome is that this aggregated data is used to address behavior and just to address the risks that we see developing.
Okay, so is the goal to sort of push them in a certain direction as far as how to think about like what their answers should be on these questions?
I don't think there is a what your answer should be, frankly. Again, and to go back to what I said, when I talk to industry on this, it's pretty much the same thing, but as I am not your chief investment officer. What I have to do as a regulator is to make sure that whatever you do, the proper risk charges are applied. I have to make sure that your customers are going to get paid. That's what I'm looking for as I would look at anything else.
Okay.
And so.
Okay. All right. Appreciate it.
Representative Thomas.
I just want to be clear. You said there are 15 states participating, obviously optional at the state level. In those states, though, any company that operates in their state borders is required. Is that correct?
Yes.
Okay. Thank you.
Anybody have anything further on that topic? Tune in tomorrow. See what our illustrious president wants to be heard.
One of your questions concerns do companies reporting have publicly stated goals in this same area? And are you finding that companies are indeed reporting that they have announced their own organizational goals, so then the program sort of aligns with their goals? I'm just sort of interested in that.
Yeah, I think, that's one of those things that everything has come together. The rating agencies are really looking at this area as they look at the whole ESG, as ESG has become more and more important.
Stockholders are looking at this area?
Precisely. And companies themselves, as a Connecticut commissioner, I can tell you, all of the supervisory colleges and the annual meetings we do, the companies are the ones that provide this information, and they tell us what they're doing, and companies are doing different things. Some may be doing it right now. Some may be doing it over the course of the next few years, depending on what their current book looks like and where they want to go. But they want to share that they are aware of the issue and they are addressing the risks that they see, which is all we can ask from, that's what we ask from the insurance companies. There is a risk, how are you addressing it? Share that with us. And we've heard certainly, I can't speak for everybody here, but I can speak certainly in Connecticut. It's something we hear from our companies, what they're doing, how they're addressing the risks, all the resources they're pouring into addressing those risks.
Yeah. I mean, certainly you have your perspective, lawmakers have perspective, you have pension systems have their own lens for looking at these things. You have organizations like New York's Council of Institutional Investors, which was formed in the 80s and plays a key role in the financial markets in advancing a lot of conversations about transparency and how significant investment in private entities can bend the public policy curve. So there is, without doubt, a tremendous amount of examination in this area. Have you ever questioned whether trying to have a more structured approach, including some sort of legal foundation behind this type of reporting, would make sense? Sometimes we venture out in areas of law on a tentative basis and then in time decide to get more structured. In as much as it has been 13 years, has that conversation come up?
I would say from my side of the picture, I'm a regulator, I'm not a policymaker. So I'm looking at implementing what the legislature tells me to do. And as I mentioned, Senator Lesser passed a bill last year, and we're providing the information, we're putting together that as to what we've done. I do think that, and certainly I would defer to the legislators as to what they think should be done. What we have to do as regulators is to make sure that what is happening properly reflects the risks and that consumers are protected. It all goes back to that. But I will also tell you, and I'm just going to throw this in because we've had so many conversations. We have the conversation on race, we have the conversation on climate change, and the two sometimes come together, diversity and equity, because certain populations tend to have will have a greater impact from climate change, according to the scientists. And we've seen insurance companies who are saying to us, this is what we want to do. We want to make these investments, even if we know we are not going to make as much money on it as we could elsewhere. We also know these are necessary investments, and we're the ones that are best suited to do those infrastructure investments. So, there is certainly, I have seen, again, I can only speak for myself, I've seen a willingness on the part of industry to address this and to make the changes that will benefit both industry and consumers. I'm happy with that.
Anybody else want to weigh in on this? Okay, thank you very much, Commissioner. The last topic on our regular portion of the agenda concerns the multi-state rate review framework for long-term care insurance.
Thank you, Mr. Chair. Troy Downing, the Commissioner of Securities and Insurance, Montana. This is a priority for the NAIC, and like a lot of things, there are no easy answers. This is a complicated problem. Even going back in the history, looking at long-term care programs, and both industry and regulators were somewhat at fault for where we got with these legacy programs. But solving the issues with these legacy problems of, the first part, keeping an eye on the consumer protection and still, dealing with the solvency issues is a priority. And, like we said, some very difficult, conversations. A lot of the assumptions for, anybody that is unfamiliar with the issues here were just wrong. And one of the big assumptions, when a lot of these legacy programs started, we didn't really understand how much these policies would be valued. There was an expectation of, higher attrition. There was not an expectation that people would live as long as they did. There wasn't an expectation that they would, claim benefits as long as they did. So all these things, we've had a obviously very difficult interest rate environment. There's all these things that really came into the issues here. And so as we're looking at, the legacy programs and looking at, rehabilitation versus liquidation, trying to maintain these solvency issues. And again, there's not a lot of easy answers on the big levers. You've got a rate lever and you've got a benefit lever. And at what point do you make it, too expensive to be reasonable, especially if you're talking to a population that's very close to taking benefits? In Montana, we've got programs where the average insured age is in their 80s. And so they're being faced with an issue of increased premium, which a lot of them can't afford. And then we've got, another solution of decreased benefits, which leaves a lot of them in a place where, they're disadvantaged. So, with that little bit of background, I just want to make sure everybody understands that it's not an easy problem to address. But one of the things, and there are some within NAIC on some rehabilitation / liquidation issues that have come up on, really what the best solution is for dealing with those and how it, has the least disadvantage for the consumer, but does not threaten what is, obviously important to NAIC, and I'm sure important with everybody in this room, is maintaining state-based regulation. And so that's a big part of this conversation, is how we can, achieve all of those things. And so, going from, the issues with the, what I'll say, the legacy programs, that's one part. But then the second part is, what does this look like, moving forward? What does this need to look like? What do we need to, what do we need to keep in mind about making sure that these are solvent, ongoing concerns? And, a big part of that discussion are, hybrid products, whether you're, using that in conjunction with a life policy. It's a robust conversation, so I'll just say that. One of the things that we are discussing, and I'm going to have one of my colleagues up here talk about it as well, is one of the challenges is really resolving inconsistent state rate review practices and understanding, because it can create some unfairness, and really understanding amongst ourselves what that looks like to make sure that it is, is accurate and correct. Without going too deep into the weeds of this, I think it does make sense to talk about that multi-state rate review framework that we are working on, and I'm going to pass that conversation on to one of my colleagues, Commissioner Pike from Utah.
Thank you, Commissioner. Commissioner Downing, appreciate the background. The multi-state review framework was adopted recently by the Long-Term Care Insurance Multi-State Rate Review Subgroup and the Long-Term Care Insurance Executive Task Force at its meeting in the fall of last year. And now the plan would be that this would be presented and hopefully adopted by the Executive Committee and the NAIC plenary in the spring meeting coming up in April in Kansas City. So that's good news. The framework outlines a process for a timely, consistent, and as Commissioner Downing just said, state-based approach to reviewing long-term care insurance rate increase filings. A lack of uniformity in kind of the way rates have been changed across the states has created a perception, anyway, that some states are not shouldering their share of the burden, if you will. And so through this new framework, regulators are seeking to reduce or eliminate the existing cross-state rate subsidization and improve the rate level parity across the states. That's really the goal. It outlines operational and actuarial approaches and aspects of a rate review. This would include technical requirements for insurers to file a request, the responsibilities of the team of actuaries that would perform the review, and governance over the process, actuarial methodologies, and advisory report template, and engagement with the insurer and state insurance regulators throughout the process. So it's really, we think, comprehensive. The review process would be carried out by a team of state actuaries with expertise in long-term care insurance who perform a single actuarial review of multi-state rate increase requests that can be relied upon by the state insurance departments and then used in their own respective states' review process. So they rely on it, but then they can do their own as well. All participating states will have an opportunity to review the work of the team and offer input into the review. And at the conclusion, then each state will create a detailed review rate advisory report that will contain an analysis and recommendation for the state's consideration. The team would do that. And then the states still, again, retain their authority to perform their own review and make their own determinations on final rate review. So, any questions to this point?
No.
Okay, let me just, I guess, to summarize kind of the benefits. Oh, yes, sir.
Thank you, Mr. Chairman, and sir, thank you for this. So this is the 800-pound elephant in the room. Oftentimes I get asked by senior folks who bought long-term care insurance, and they're the people that are creating these legacy programs or the result of these legacy programs. And when I tell them the assumptions were wrong, people are living longer, and they tell me, so we pay increases every year and our benefits stay the same. What's a simple explanation to try and tell them that? Because they think that that's the problem with the actuaries that gave the advice.
And thank you for that question. Like I said, it's not an easy place that we find ourselves in those issues. And when we're dealing with seniors, because we do have those conversations, we have them coming into our office because they have these, I'm talking about Montana now, obviously, specifically. And there's, like, as I said from the beginning of my presentation, the assumptions were wrong from the carriers, and in my personal opinion, the regulators weren't looking closely at that, but we are where we are. And so what's really important, for us at this point is for the consumers to understand really what that universe is. If they're being faced with a premium increase that they can't afford to assume, the other option is often reduced benefit options, which is another lever. But what's important to us and part of the discussion is that that's well articulated by the carriers to those consumers so that they really understand, the universe of those options there. But again, these are not easy conversations, and this is not an easy problem. I don't know if one of my colleagues has something to add to that.
I liked your comment, Commissioner. Unfortunately, we are where we are. And so what the key is if we're going to improve the situation, we have to do something different. And I think this multi-state review process will certainly help a lot in that. Other comments from our colleagues?
I might just jump in just a bit. And I think you've responded well. It is a very difficult position that all of us are in. Certainly you are in as policy makers and as you represent constituents. On all lines of business, our job is to look at their adequacy and their solvency. And whether you're talking about auto insurance or whether you're talking about whatever product, where it particularly becomes difficult is in these products, because the industry and we as regulators really missed the mark when the products were first designed. We did not anticipate how many people would want to keep them. We didn't anticipate people living as long as they have. We didn't anticipate the cost. And frankly, there's nobody that's done a really good job of examining the costs of long-term care facilities. I know I have my mother in one. I know what it costs in Boise, Idaho, and it's outrageous. Nobody anticipated that. So then the dilemma for us is, how do we make sure that the company stays solvent? Because it doesn't do us any good to allow or to force the company into receivership. How do we make sure the company stays insolvent and give consumers the ability to have these products that they have purchased? In some cases, some of the companies are well capitalized because they sell other products. In other cases, they're monoline companies. And we've gone from 100 companies to less than 20. I think we're down to 12, if my memory serves me right, that are still offering these type of products. It is, and many of them loaded with benefits that are expensive. You take the benefit of the inflation rider alone, that is an expensive load that is driving costs faster than really what they can pay out in benefits. So it is a no-win situation for all of us. We have been working on it, and frankly, we felt the best solution was, first of all, to get all of the regulators on the same page as much as possible, without withdrawing our own autonomy and our own ability to make that tough decision. We needed power. Information is power, and so we needed to be able to have somebody, some third-party entity, review the request and make the determination as to whether the request is reasonable or not, and then that gets hopefully applied across to all of us, which will help keep the company solvent and minimize benefit reductions that consumers would receive.
Thank you.
Did we have anything else on our side or any other questions on that?
I'm looking to see if any of our colleagues have any questions. Tom Oliverson.
Just very briefly, commissioners are obviously very grateful for your attendance. I think my understanding, or I heard the other day, that y'all are looking towards the air ambulance issue with subscription services.
We'll get to other business. I meant.
I'm sorry. Okay, yeah.
We'll get there.
Sorry, that's what I get for stepping out.
Thanks, Tom. Thanks. Anybody have anything else to add on the topic of long-term care insurance and the standardization, the creation of uniform ways of reviewing rate regulation? Well, I think we all appreciate the difference between a national standard and a federal standard, and I think we also understand the need to have standards and uniformity, but also to leave the flexibility of the states. I know between then and now, some of our colleagues have heard from their commissioners that they thought that this methodology might have impinged upon their ability to individually regulate in their states, but based upon the comments of Commissioner Pike and Commissioner Downing, it sounds like those have been taken into consideration and addressed. So with that, that concludes the regular business of the meeting. We are now in the area of other business, and I will recognize first Assemblyman Cahill to raise an issue that has been coming up, and we will get to you, Tom, about the Standard & Poor's rating and how there is some sense that perhaps it is being used as something other than an objective means of rating insurance companies, but maybe being used to make it look as though if you use one rating company, you might be a little better than if you used a different rating company. Have you heard any of these complaints?
Absolutely.
Oh, what a coincidence. Go ahead. You want to talk about it a little bit?
Sure. I'll be happy to address, and certainly others can jump in if they wish to. And if I don't answer the question the way or don't hit the nail on the head, then please let us know. First of all, we are very aware of the approach that S&P has taken. We are disappointed, I guess is the word I would use, that there would be an insinuation that the NAIC supports their efforts. That is not the case. And let me be perfectly clear, we have not endorsed, implied, or do not necessarily support the direction that they've taken. We acknowledge that there may be some rating agencies that don't operate at the same standards as others do, but we don't feel like that's our role or our responsibility to engage in that. Obviously, I had calls on it earlier today. We will be discussing it on Monday in our officers' meeting and discussing the appropriate response and approach that we will make with Congress and with S&P as we move forward.
I'm pretty sure that it will be taken up in our Financial Services and Multi-Lines Committee here. Any advice for how you think we ought to start to develop our framework for looking into the issue?
So off the top of my head, my only advice would be, I don't know that it's necessarily our role. I don't think it's the regulator's role particularly to determine what those standards are. If Congress determines that the rating agencies need to have some sort of standards, then that needs to be done in their forum. And I don't think we can allow one entity to unilaterally sort of change the standards for everybody else. So I would walk carefully and clearly. It would be my advice.
Okay. So now I'd like to return to Dr. Oliverson with his question about air ambulance.
Yeah, and I'm sorry.
Thanks.
I'm sorry to bring it up because I'm sure I'm causing PTSD for all the lawmakers in here. But I just heard a rumor that y'all were going to be looking at it, and I'm very curious to kind of hear an update on that or what you're thinking, because obviously, as you know, we went through that here at NCOIL over the last year, and you know, we come from a variety of different states with different issues, and so I was just looking to kind of see what you're thinking and where your wisdom is leading you, and if you guys have any comments for that.
Well, maybe I'll start, and then maybe I don't know if Commissioner Mulready has something he wants to add. First of all, we have been discussing it long before the passage of the No Surprises Act. We have a member, one of our commissioners, Commissioner John Godfrey, who serves on the national committee. I don't remember what the title of that, in the Department of Transportation, and certainly have been attempting to address it further. Many of us are I'll use the word grappling with how to handle the No Surprises Act and what is our appropriate role as commissioners. Some of us are deferring to the federal government, which we're not very comfortable at. Some of us are taking on the enforcement of the No Surprises Act, which is what Idaho's doing. However, I don't have any authority over providers, nor do I want any authority over providers. I do have relationships with providers, and so I'm confident that I can collaborate with the provider community and the carrier community, which I do have authority over. Typically, we handle complaints from consumers who have purchased insurance and aren't getting what they expect to get. The No Surprises Act asks us to take complaints from people who are uninsured, which is a different standard and requires us to make some additional changes. So we are trying our best to implement the No Surprises Act as constituted. Obviously, there's been a recent court case that we're all watching carefully to see how that occurs. I think it's important to note that the court case maintained all of the principles of the No Surprises Act with the exception of what the measurement is for reimbursement. Yeah. And so we'll be watching carefully as to how that occurs. And it is a little bit of a moving target. We're sort of building this plane as it's being flown, if you will. And we'll look forward to certainly working with you and collaborating with you on any ideas or thoughts that you might have. Glenn, I don't know if you had anything else that you wanted to add.
Actually, thank you, Dean. Actually, not a lot to add, but a couple of comments I would just make on the B committee, the Health Insurance Committee at NAIC. I mean, a lot of our time out of the gate here this year will be spent on the No Surprises Act and how that's rolling out in each state. As Dean mentioned, it's all over the board how the states are handling that, and then whether we're just pawning that all to the feds or the number of states that had some sort of surprise billing state legislation in place. And so we'll be walking through that, And then the court case, I just jotted those notes. He mentioned most of those, the reimbursement issue. I think one other thing I might just mention is the sort of evolution of all payers claims databases that states are, I know we are, and was just talking to Troy, different states are looking at doing that. There's grant funds now available for $2.5 million for federal dollars for states to establish those. So I think that'll impact a lot of those issues as well.
Okay. And then I guess, if I may, Mr. Chairman, as a kind of a related question is, you mentioned the No Surprises Act. Obviously, sort of the glaring omission there is the ground ambulance issue. I tried to tackle that in my state this last year, and I was really surprised at how complex it really is because, it's not just a matter of having another sort of biller out there, but, you have this weird intersection of state, local, county entities that are often the ones that are setting the rates, and you also sort of have at least in my state, you have almost a 0% penetration of in-network status. I mean, it's just really bizarre. In fact, TDI actually looked at it about a decade ago, and they concluded that there really was no point to having network adequacy provisions for ground ambulance because neither party really wanted to talk to the other. And so I don't know what the right solution is there, but I sort of feel like it's going to take all of us if we're going to move something down the field on that. I feel very bad for consumers that's sort of the one issue that they're still very vulnerable on and get pounded on. And quite frankly, where they get pounded the hardest is not the trip to the emergency room because they, fell off the building or having a heart attack or in labor or something like that. It's the routine transports to and from the hospital to the nursing home and other facilities that tend to creep up on people and leave them with very, very high out-of-pocket costs and essentially no recourse. So I'm just wondering, again, if you have any comments, great, but if not, I'm just hoping to be able to work with you all because I think it's going to take all of us to solve that problem.
Tom, I don't have anything to add except say amen. I think we do need to work together on that.
It'll be an interesting transition as we work through the No Surprises Act. I don't know that we even completely understand all aspects as how they will impact, and I'll just give you an example. The leverage or the amount of effort that a hospital now has to put in for having providers and other entities who are out of network is tremendous. There's a potential that there will be an encouragement, a financial inducement, if you will, that hospitals will want to contract with ground ambulances or others, anesthesiologists, etc. If that occurs, then some of the issue might go away. If it doesn't occur, then you're absolutely right. It is a little bit of a keg of worms. So we'll look forward to working with you on it.
Thanks. Does any member have a 2-second comment to make? No, hearing none. Gentlemen, anybody want to make a closing statement? We're running a little bit late, but that's okay.
Yeah, no, I'll just finish with, again, saying thank you for the dialogue, thank you for the relationship. I completely agree with Commissioner Mulready. I'll just tell you, the first NCOIL meeting that I attended was in Boston. Tom's heard me tell this before. And the commissioner from Vermont sat at that table, and when she left, I think she was about 40 pounds lighter after NCOIL got through with her.
I miss those days.
Yeah. Well, I was on your side of the table then, and felt like we really, at that point, felt like we needed to do a better job. And your leadership, Matt's leadership, Tom's leadership, all of your leadership has been tremendous in working with us. I said to you last time I was with you that we wanted to continue to improve relationships, and we're doing that. And one of the things we're doing, and I think you and I talked about it, is we're going to have a quarterly conversation. Yep. In which we're able to share concerns both ways. That doesn't mean we're always going to agree, because
sometimes you're going to be wrong. Yeah.
At least in my household, my wife tells me that's about every other day. So we certainly are willing to admit that, and we do acknowledge that we look at things with a different set of glasses than what you get to look at things. But communication is the key, and us being able to work together, I think, is tremendously important as we work through various model acts, through various issues, et cetera. And so look forward to that continuing.
Well, we do too. We value not just your input, but your expertise, your perspective helps us do a better job as state legislators, I think, separate and apart from the fact that we often have to call upon you as, for constituent services and those sorts of things as well. Just your expertise and your view of the very same things that we're working on is very helpful. And also where we do find ourselves on the same page, it's even more helpful. So I'm looking forward to continuing to do that and to find those places where we don't agree and figure out how we get you to think our way. So with that, if there's nothing else, I will entertain a motion to adjourn. So moved by everybody, second by everybody. This meeting is adjourned. The next meeting takes place in this room. It's 2:45. It's actually going to be a couple minutes late. Maggie Carlton will be moderating the search for a successful public option. Thank you, everybody.